Yeah guys, welcome back. What a weird day, that's for sure, cause for today I was trading a little bit and I had a trade and I got the stop loss, but just because of the news and everything, and yeah, I was expecting to take profit. I'm gonna show you, but doesn't matter. In this video we're gonna continue talking about the fair value gaps, and I'm gonna show you some bullish fair value gaps and bearish fair value gaps, examples in those. So let's get into it. Yeah guys, let's delete all the drawings. Yeah, okay, get back. It was my trade, and as you can see the take profit was basically in the bottom at night, at evening, no, and I left for the night, and after that, yeah, here was a stop loss. I mean, I still took a profit. It was 1 to 2 almost risk reward, so it's good. It's still profit, you know, but yeah, like that. Yeah, let's get back to the bearish and bullish fair value gaps, and we understand that bearish is for the bears when the price going down, when we are looking for the bearish fair value gaps, and when we have the bullish, the bulls, we are looking for the long positions, we are looking for the options, and it's gonna be bullish fair value gaps. So we can have something like that. Yeah, we all know how the market moves. It moves with higher highs and higher lows. Yeah, and here what do we have? We have the boss, we have the trend continuation where the price is going up. When the price creating higher low, like in this case scenario, and after that making a new break of structure right here, after that it's gonna try to fill the gaps. As we talked about, market seeks them. Most of the times the lowest point gonna be on one of the fair value gaps. This is just a possibility, but it's gonna look something like that. Yeah, you see the new high low was formed in the fair value gap here. We don't know exact candle, but I'm gonna show you. And in this case scenario, we have a bullish fair value gap. Means that we are looking for continuation, we entering the trade, something like that, we putting the stop loss below our previous high low, and putting the take profit on the new high, in this case scenario, a new break of structure. And we can have decent profits, we can have decent risk rewards, but in this case scenario, for you to write down, we have a bullish FVG. The bearish fair value gap is totally the same, just opposite. Yeah, it's forming new lower lows, new lower highs, and moving the market. And if you know the market structure, we are looking for the bosses, we are looking for price to come back, fill the gaps, just do not get above here, because then we have misunderstanding of the market. But basically here we're gonna have one way or another some fair value gaps, and from there we can enter the trades, we can enter the short positions, put the stop loss above this level, above our lower high, and take the profit of the new boss somewhere below lower low. So the market creates break of structure, and we are taking advantage of knowing this kind of the information and entering the trade. And in this case scenario, yeah, also 1 to 3 risk reward. So now let's get into the charts and look for some examples. I'm gonna try to look for you something interesting. What do we have here? We have that the price is one way or another going down, you know, a little bit down. And yeah, here we had a bearish fair value gap, one from the wick to the wick, and the price is filling it. So even if we entering something like that, you know, after the price starting to go down and our fair value gap is filled and it's going down. We're putting our stop loss above the VIX, above the previous lower high, and taking our profit on the new one, which could be possibly be somewhere below this lower low. Because if we go to the higher time frame, the market structure gonna look like this: bam, bam, bam. We are targeting below, which wasn't here, but it was a consolidation, and after that the market reached that. You see? So even if we put our take profit here, we're gonna win the trade, and the trade gonna be 1 to 1.7, which is still amazing, because if you're risking $1,000, you're gonna win 1.7. It's amazing. And we're just applying the fair value gaps and the market structure. A new one, we can look for, market created change of character. What do we know about that? That the characteristic are changing. The price was going down and now it's going up. What we are doing, we are looking for the fair value gap. Here, first candle, second candle, and the third candle, from the wick to the wick, and we have our entry point. What we are doing, we are waiting for the price to go down. We entering on the fair value starting point, and the stop loss gonna be below our lowest point in this case scenario, and we have an amazing uptrend bullish fair value gap. After change of character, the price went down. Then we look for the fair value gap because it's valid, and we're changing the positions from the downtrend to the uptrend. And after that, we're targeting something which is going to be, for example, these highs here. And still we had an amazing trade, which is 1 to 4.5. So if you're risking 1,000, you're gonna win 4.5k. This is amazing. Yeah, guys, so I explained for you, I showed example 1-1. What you have to do right now is open the trading view and try to look in the bigger time frame, try to look for the fair value gaps, and try to understand how does it moving, how the market structure is applying it. Try to apply this information on your charts and try to maybe take a trade, but with that you're gonna need an exchange. So for that, check the description, join the ecosystem. You're gonna find there everything with explanations, with the videos, with everything, how to register and how to start. So yeah, guys, thank you so much for watching, and see you in the next episode.